Hey everyone, welcome back to Corporate Decoder. Today we've got a filing from PJT Partners Inc that might sound a little dry, but stick with me because there is some interesting moves happening behind the scenes with a key insider. We're going to decode what it means for you. Before we dive in, if you like getting clear, no. Nonsense insights from these corporate disclosures, do yourself a favor and hit that subscribe button. We also have a fantastic community over on Discord, and the link is down in the description. It is the perfect place to chat more about these filings and share your own takes. Alright, so what we're looking at here is an 8K filing from PJT Partners Incorporated, dated the 26th of November 2025. Now, an 8K is basically a company's way of telling the public about major events that shareholders should know about right away. Think of it like a breaking news alert for investors. PJT Partners is a financial advisory firm really focused on strategic advice. They help companies with things like mergers, acquisitions, and restructurings. They're pretty well known in the industry for their expertise. The main meat of this filing is under the Other Events section. It talks about something called an exchange agreement, and more specifically, an exchange involving none other than the company's chairman and CEO, Paul J. Tobman. So when the boss makes a move, we pay attention. Basically, PJT Partners has this system where people who hold partnership units, which is a type of ownership in the company, can exchange them. They get to do this every 3 months or quarterly. It is a way for them to potentially cash out or convert their ownership into the company's actual stock. Now, here is the headline. Mr. Tobman himself is planning to exchange a significant chunk of these units, 36,000 of them. This isn't just any shareholder, this is the person at the very top. Whenever a CEO or chairman decides to exchange their units, it often signals a few things. It could be for personal financial planning, but it also means they are converting their stake into something more liquid or directly into shares of the publicly traded company. And when will this happen? It is scheduled to be settled in February 2026, right after the company releases its earnings for the fourth quarter of 2025. Now, here is a crucial detail. The company has the choice whether to pay Mr. Tobman in hard cash or in the company's class, a common stock. This gives the board some flexibility in managing their cash reserves or their stock dilution. It is a pretty standard clause in these types of agreements, but it is good to know where the control lies. But wait, there is more. Mr. Tobman isn't just doing this once. He has also signaled his intention to exchange up to another 36,000 units in each of the next 3 quarterly periods. This shows a consistent pattern of converting his partnership stake into a more direct shareholding or cash over the coming year. Now, let's put this into perspective. If he goes through with exchanging the full 36,000 units in each of those next 3 windows, cumulatively it would amount to approximately 2.5% of his total economic ownership in the company. 2.5% might not sound like a lot at first glance, but for someone at the CEO level, it represents a pretty substantial amount of value he is choosing to convert or realize. It basically means a significant portion of his investment is becoming more liquid or directly tied to the stock price. And finally, the signature block signing off on this report. It is signed by David A. Travin, who holds the title of General Counsel for PJT Partners Incorporated. This is the standard part of any SEC filing, confirming that the company is officially making this announcement. Now, looking at this filing, what is the story here? It is not about dramatic financial swings or a sudden crisis. Instead, it is about controlled financial maneuvers by the top executive. Mr. Tobman is systematically converting his ownership stake. This could simply be a well-planned financial strategy for him personally. Or it might be a signal to the market that he is confident enough in the company's future stock performance to hold shares directly. The fact that the company has the option to pay in cash or stock is also interesting. If they choose stock, it could lead to a slight increase in the number of shares outstanding over time, but given the 2.5% figure, it is unlikely to be a drastic dilution. There is no immediate red flag here, but it is always worth watching what insiders do with their stakes. It can be a subtle indicator of their sentiment about the company's prospects. If confidence is high, they might prefer to hold stock. If they need liquidity or see a specific price target for selling, they might opt for cash. In this case, with him planning this over several quarters, it feels more like a strategic rebalancing of his holdings rather than a sudden exit. So, my take on PJT Partners right now, based on this filing, is that they are operating in a stable, predictable manner with their leadership making deliberate financial decisions about their personal holdings. The business itself, advisory services, is often less volatile than other sectors, and these kinds of insider actions are fairly common. The key risk for a firm like this is always market downturns impacting deal flow, but this specific filing doesn't address that directly. The opportunity lies in their reputation and continued ability to win significant advisory mandates. Alright? That is our breakdown of PJT Partners' latest filing. What do you think about Mr. Tubman's planned exchanges? Does it signal confidence or something else entirely to you? Drop your thoughts in the comments below. If you found this deep dive helpful, please give this video a like. It really helps us out. And of course, subscribe for more corporate secrets decoded. Don't forget to join our Discord community, linked in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next one.